All right. So, Andrew, I'm excited to dive in with you today. Why don't we kick off the conversation with what you're attempting to build, what the vision is with Extend Enterprises or Extend. Yeah, we'd love to hear from you.
Yeah, no, absolutely. Look, our mission is really to modernize the payments industry from the inside out, right? Which is a little bit different to how you see fintech and disruption. Typically, they're trying to do it from the outside in. And by that, what I mean is we're really trying to bring modern digital features, in this case, digital cards, to the traditional banks that haven't been able to deploy these new digital capabilities at the same rate maybe as emerging players have been in this space. And I'm talking about emerging neo processors, the likes of Marqeta, Stripe, who focus on digital card issuance through their APIs, but also talking about more modern neo issuers, right? The likes of the Ramp, the Brexes, the Divvies, who essentially have stood up their platforms to handle both physical and digital cards all in one. And our aim here is really to provide the banks with a digital toolkit for them to be able to actually stand up their own capabilities as quick as possible to actually be able to get into the market.
So what would be an example? Is there a customer that you can walk through what their problem was and how you helped them?
Yeah, no, absolutely. So look, if you think of the world we live in, and look, there's a million use cases because actually you realize that credit cards have a million different use cases. And the reality, it's all about the immediacy of digital versus physical, right? Which you have to go and have printed and sent out, right? And then you can actually start using it. The idea behind digital is, look, I can actually give someone access to a card in less than 30 seconds. And that's really the key that sits behind it. And then companies use it in two different settings, right? On the one hand, it's I have people in my company that need to spend, right? Because of COVID, now everyone's dispersed and they actually need to spend, but actually they don't want to use their own card. So how do I give you access to go and pay for those subscriptions, right, in an instant? Well, I provision you directly with a virtual card, and you can now essentially go and settle those subscriptions, right, using essentially the company's dollars versus having to go through and use your own cards, right? Then there are other businesses that are embedding payments, right, into their experiences. And here we're talking about hauling companies that need to go and pay for tolls, right, and fines. But here it's happening at a really rapid clip. And so it's not a case of a neat little user experience no, it's a system being able to request a unique card account number for a specific truck going through a specific toll point and having the ability to do that at scale and at really massive speed, right? And that's a difference between digital cards in the context in the second case where APIs are really key. And then in the first case, really, it's about actually I physically just need a way to access an account. And that's really the difference there is creating that user experience.
So do you think of it as increasing the granularity of the approval process of payments? I mean, when you mentioned the individual truck, I think of that as being one identification within a network of trucks. Is that the right way to think about it?
That is absolutely the right way to think about it. It's about being able to tag, right, every single transaction and reconcile it instantly, potentially to a process that you've already kicked off, within your own company, and be able to allocate all of the different charges to these different trucks and lorries. So that's absolutely one part of it. I think even on the individual level, it's about being able to tag those transactions too, which says what cost center does it belong to, what profit center is it, or is this card for a specific project or a specific marketing initiative? So let me tag it up front so that when the charges come through, we automatically know where they need to be accounted to. And we don't have to go through this reconciliation process and really trying to find out who did what with a card that was maybe shared across multiple people in the team. Now it's like one card, one individual, one card, one potentially even one transaction. And so you have that ability to have complete transparency, right? And the beauty of it is it also happens in an instant versus going through a convoluted, set of approvals. We all know what it's like to work in a big company and you need 17 steps of approval, and before you know it, it's like, I'm just going to use my own card and go through reconciliation on my own because this thing is taking too long.
Yeah. No, this makes perfect sense. And why now? What were you doing? You looked like you started a company in 2016. Is there something that happened to you or that happened in the industry that you saw? What was the inspiration?
Yeah, so actually Extend happened, I'd say, a little bit by accident, right? I started my career really 10 years consulting with SAP around financial. So I sort of understood the mindset of companies, of how they made payments, and how people had to go through reimbursements. Why? Because I had to, for the first 3 years, figure out how to set it up within the context of SAP. And then I sort of managed the different scale of projects. But I then, 10 years later, went to American Express, and there I sort of worked for 12 years really in their commercial card division. And I'd say my unfair advantage was I actually understood how companies made payments, right, relative to everyone else, and really was allowing me then to understand the payment rails, not just the process through which things happen. It's actually physically what were the payment rails doing and how were those payment rails operating. And I was fortunate to be in there at a time when Amex was really growing its B2B business practice. So I was able to go and double that business, right, over the course of the last 5 years I was there through new digital capabilities. And that involved aspects like digital cards. It involved other ways of paying vendors, right, and allowing them to benefit from float and other working capital pieces. So I got that lens, that perspective. Now, I actually left Amex for a personal reason, and it's all linked to my mother's health at the time. She was going through cancer treatments, and for me, it was just time for me to prioritize my own life. Having been in the US at that time for the best part of 10 years, I recognized I needed to go home and really sort of spend a little bit of time with my family to deal with that. And then, a year, 15 months later, I really sort of came back into the workforce and sort of had a choice to make. Did I want to go back in an established bank? And there was some very interesting conversations happening there. But the beauty of spending time out of the workforce is you really actually get to think, what is it that really motivates you? Right? I didn't have the stress and strains of being in a job, thinking about another job. It was just a case of, okay, this is a great moment to recenter myself around what is it I want to do in my next chapter. It's not like I've switched jobs a lot. I've actually worked for 2 companies. And so it was a case of actually what is it that really motivates me? And I realized that the motivation for me was actually in building. And that's what I enjoyed most. And I had the chance of building a whole platform at Amex. And I was like, actually, I'd like to do that again, but maybe this time do it on my own account. And then, one day when I started going through the different aspects of opportunities, I met Danny, who was a very good friend of my wife's, and we chatted a lot around potentially us setting up this company together. And because he was a full stack engineer, I really felt we had fin and tech and we could actually make something work as opposed to just being concepts. And that's really how we triggered the start of the company and set ourselves up in April of 17, was realizing we wanted to go and serve the market, the existing market, with better capabilities. Because we could think of use cases for consumer all the way through to commercial. We just happened to go for the low-hanging fruit, which is commercial initially, with then a view, obviously, of expanding into consumer over time.
Interesting story. So when you come out of that experience, or even towards the tail end of your experience at Amex, you've been working for 2 companies. You've been there, each about a decade at each company. What did you walk away with any conceptual understandings of how the payment system works, or do you look at the knowledge that you pull out as like being, 1,000 different individual relationships, or is it more in an understanding of how the whole system works? Anything you could articulate, what would you teach, or how do you even explain it to people with your skill set there?
Yeah, so look, there's a lot of other things. Number one is obviously the connections are key in the industry. And I think there's plenty of folks who have worked with the Amex who are now at all the different networks and all the different banks. So it's a network advantage, obviously, for someone creating a company that has that amount of experience and exposure. I think having worked inside of a large financial institution, you also understand the importance of regulation. You recognize there's no point trying to skirt around them. Things like sanctions and other things, right, are really important to understand. And so that's also a good mindset to have. What really compelled me to go and start this company was seeing Brex getting out there and saying, we built the new perfect credit card for startups. I'm like, well, hang on a second. Credit cards are not that complicated where you need something for that. But what they did was clever, which is a new way of underwriting based on cash on hand. And sort of now getting in the startup world, you start realizing, oh, I get it. So what I don't have is revenues, but what I have is cash because I've raised capital. So surely I should be able to use that as collateral for me issuing credit cards. Clever concept, right? They're the first ones to get into market with that thought. But so I listened to that and was like, that's interesting. That's a good first thing to note. And then I also saw really who was powering them. And it was really the Marketas of this world, the Stripes of this world. But what I had learned and understood from being inside the industry is none of these banks were ever about to be in a place where, when they're large established banks, that they were going to rip out their existing processes, which is TSYS or First Data or essentially Fiserv, the old former, the Fiserv First Data piece, or the FIS platform. Look, these companies have spent hundreds of millions in implementing these platforms. It's not because the platform itself costs hundreds of millions to actually build. It's because it has to be baked into customer service, to a remittance process, right? To the whole statement. Everything has to come together, and it's that integration that's so hard. And so the realization for me was like, well, none of the big banks are going to have the opportunity to use the digital tools of Marqeta and Stripe because they're wedded to their existing providers. And it was really a realization that there was clearly a massive need in the industry because these platforms were going direct to corporate. And then these emerging players, emerging card issuers, were sitting on top of those processes because they wanted those same digital API stacks that allowed them to go and innovate in terms of how they launched products, made cards accessible to people, or made cash accessible to people. And I thought, well, hang on, it actually we should be able to port that experience into an existing framework. And that's really what we spent probably the best part of 3.5 years, is figuring out, how can I play in the sandbox, right? The sandbox is defined. So now how do I essentially say, well, great, I know what I have to play with. So let's figure out how we essentially build something that is native to that ecosystem, that doesn't require the bank to go and invest money in technology and project work, because then you're at the bottom of a list that's going to take 4 years for you to get through. That was our first thing we had to figure out. And then the second piece was, actually, how do I contract with these banks in a smart way where I don't have to do the whole onboarding for 2 years? And so that's really where we started thinking about, well, who are the strategic providers to these banks? And so how do we get onboarded by them so that they then can sell our services directly to the banks and do it on their paper, not on our paper? So remove really the two areas of friction. Remove technology as a barrier, remove onboarding as a barrier. Now you have a scalable play, right, to bring these digital assets out to these banks.
All right, so let me try to summarize that. So you saw Brex and those, it's called Brex and Company, early startups coming around. And I imagine they're using Plaid, or they're using some kind of bank API integration so they could see the balances on the startups in the bank accounts of the startups. So then underwriting could say, hey, we'll give these guys a credit card even though they don't have a lot of revenue because they have a lot of cash on hand. And then you say you want to get into selling into the banks with a similar model, but the banks have all these incumbent systems that are super hard to get into, which makes a lot of sense. Do you, it sounds like you're kind of riding the, I don't know if riding the coattails is the right expression, but you're partnering with organizations that have a relationship with the bank. So is this like, what would be an example? Is this like a vendor that sells something to a bank that you then are like an add-on, or
so think of us,
how would that work?
Think of us as Intel Inside, right? We power capabilities on behalf, right, of the actual providers of a service, right, which are the banks, right? That's how we thought of ourselves. I didn't think that many of these companies wanted a new banking relationship, right? No one really needs a new credit card. You only go there if it offers you capabilities that you can't get from your existing provider. And really what I realized was the need for digital was really rampant and growing really fast. And so for me, it was about saying, okay, how do I change the mindset within the bank around how we get digital into the hands of people faster? And what we did was really...
What's digital? When you say digital, does that mean, what do you mean by
digital?
that?
So digital credit cards, right? So how do I get essentially into a world where I can really easily get you a card in a matter of seconds? Because that's what these other platforms were doing. And so for me, it was about, how do I sort of overlay this service? And we came up with a really creative concept, which is, well, actually, what if you could start your journey with the existing credit card you have in your pocket? What if you already have the tool that's going to allow you to then generate virtual cards? And that's really where we came up with a creative solution, which is, I'll let you register that card through the Extend application, and I'll authenticate with your actual issuer to make sure you are the owner of that card, right? And once you've done that in less than 5 minutes, well, now in less than 30 seconds, you can send out as many virtual cards as you want, right? And so what I mean by that is you take your line of credit and you shard it out into as many pieces, right, with as many controls as you see fit, right, depending on the use cases you're trying to solve for, right, whether it's employees or whether it's for your fleet of trucks or what it is you're trying to do as a business, right, give you the toolkits that allows you then to essentially then embed payments into whatever experiences you're looking to bring to market.
Okay. The pieces are starting to click for me. So you'll take an existing card that a company has, and then you'll allow the company to create these virtual cards, but you as the business, Extend, will charge the original card. So the original card will accumulate all the individual transactions, but it'll be broken up into a screen where the company can see the different categories and the different virtual cards attributed to each expense.
Yeah, that's exactly right. And importantly, right, we don't issue cards, right? We're essentially leveraging what those banks can do and creating, right, that digital distribution of their own cards, right? So importantly, we don't issue cards, we don't process the cards, but essentially we create now an ecosystem through which, hundreds, thousands of cards can be created and sent securely to individuals for them to access or for machines, right, to be able to process.
And are those virtual cards, are those actual credit cards that are being issued? So you're hitting an API on the bank side with something
right.
that's creating those cards?
So there's multiple providers of these digital cards, right? The networks typically have their own tool. The processors often have their own tool, and then there are just third parties that have built these virtual card engines that allow essentially for these accounts to be created through APIs. So there's probably about sort of 7 to 10 of them really here in the US that are out there using that technology. We ping those APIs and importantly, right, we help provision these controls, and in cases where it's important, we actually enable the digital experience through a phone, right? Because at the end of the day, you need somehow to be able to access that account, and in some cases, you need to be able to take that account, put it into your digital wallet, whether it's Apple Pay or Google Pay, because you want to use the contactless element on your phone to charge those cards, right? So we provide all of those assets that enable that journey for those individuals and for those companies.
Gotcha. All right. That makes a lot of sense. I can certainly see the value layered on there. It's amazing. I wouldn't have even thought about this. If you're thinking about credit cards in the early days, this is a problem that arises when you have, so many businesses making so many transactions. They need to reconcile and organize it. But you couldn't have done this, right? Your business couldn't have existed without that layer of API virtual card creation. Unless you can hit an API and create a virtual card, it wouldn't have been possible. Is that right, the way to think about it?
Yeah, I mean, look, if you think of the way virtual cards were created, and they're about 22 years old at this point.
Wow.
The technology that sits behind it. It's not modern, right? It's been used for a long time. So if you go on these aggregated travel websites and you go and book a hotel on your own personal credit card, actually in many cases, it is a digital credit card that holds your reservation, right? So they've split the two transactions. They've taken money from your card and they've essentially assigned to the booking a virtual card for you when you go and stay. And it's valid from the day you check in till the day you check out. And it's for the exact amount of your hotel room. So that technology has been around for over 20 years. The difference is it was built really as an enterprise solution. It was built for two machines to talk to each other, right? And it was really built with that in mind, which meant it was really hard for banks to deploy this at scale across all of their customers. There had to be an implementation team. They had to set up a new account, so a new contract was needed with the client. Well, if you're doing that, there's no way you can scale this across your thousands and millions of card members. So what we did was say, well, that's great enterprise level technology. How about you dumb it all the way down to me using my existing card as a jumping off point for accessing that very same technology and making it accessible to small business. And that's really been our focus, is really about small business, middle market client access to these tools that were actually historically only made available to really massive customers.
Yeah, no, I like it a lot. I could see even just a 5-person flower shop having multiple cards and multiple virtual cards for different people in the organization to do different things and stay more organized. I think it's hard to value sometimes the benefit of being organized, but there's a couple of my friends that run brick and mortar businesses, and I feel especially when you have like a half online, half offline business operation, it's amazing. It can be just as much of a challenge to run a small, like local brick and mortar shop as it is to run a large, like fast growing venture funded startup. So yeah, I appreciate that.
At the end of the day, right, your financials are going to be audited one way or another. And I think that's the key, right, is really having a thorough understanding of who's spending where and when, and just making sure, right, you have total oversight. And it doesn't matter if you're a small business. I'd say if you're a small business, you're even more focused on it, right? Because a couple of wrong charges and really your business goes sideways. Yeah. So the reality is the risk is obviously greater in big companies because those one or two suddenly multiply into hundreds and thousands potentially. And so that's why there's that real focus on making sure that people always know what is happening when and where.
Yeah. I'm curious to ask you about, well, first thing I want to check off is where are you guys in terms of the site, or not the site, the size of the company? You've raised 40 plus million, or how much 55. Have you raised in terms of funding?
55.
And
so
what, I guess team size?
Yeah, so look, we just closed our Series B over the course of the summer. And so we raised 40 million with two new key investors coming on board, which is March Capital and B Capital as the two main new investors. And behind us, right, who did the first couple of rounds was Point72 and then Fintech Collective. And so we closed this last round really with a view, which is our Series B, with a view of now really scaling the business, right, in terms of going after more banks, making sure we can also onboard more fintechs with our APIs so that they can embed payments also into their own business processes, and sort of then build out the technology team, right, as we start thinking about building out more controls that we can actually start overlaying onto the product, right? So should a card transaction be approved or declined at the point of sale based on a set of rules that are contextual to that particular use case, right? Is it the right time of day? Is it essentially the right day of the week, right? Is the merchant name, starting with this name? So you start to having really much more granular controls around transactions that are approved and rules that are not determined based on your spend patterns and profiles in the past, right? Which are relevant for consumers, but much less relevant in the B2B world.
Yeah, interesting. I dig it. Well, congrats on that progress. What was Amex like? I want to ask you about that. So you spent a long time there. Do you think of maybe even not necessarily just Amex, but the credit card companies as being, I mean, from an external perspective, do you think they are innovative and well-run organizations given their business model, or are they more or less? They're so powerful. You know, these credit card companies. There's so few of them. And we're at such a dynamic time with crypto coming into play in the world financial economy. And I wonder what the attitude is internally. If it's like, hey, we're just going to run our existing model as long as we can, or we're going to try to find some kind of adaptation to the new world, or, like Blockbuster, do you feel like they're just generally behind the eight ball entirely? I'm curious your perspective.
Look, I chose the path I chose as a startup because I seriously had a firm belief that actually they're in the driving seat. I think people forget that the credit cards and credit card networks have created quite an amazing ecosystem, right? Which is with a piece of plastic, right? You can walk in to any number of 1 million different merchants around the world and create instant trust, right? That the good you're going to walk out, the service you're going to take is going to be settled, right? Just by virtue of pulling out a piece of plastic. That's a pretty incredible thing when you think about it. And I think a lot of people say, well, credit cards are dead. I'm like, I don't think you understand what they've built. They've created a trust ecosystem, right? Which is really hard to replicate. And so that's the number one founding principle was, okay, they have an amazing asset. The other thing is look, banks have very loyal customers. Customers don't want to change banks unless they absolutely have to. And so my view was, well, I'd rather essentially start adding in services to those very same bank customers, of which there are millions already, than having to go out there and build my own brand and go through that exercise, a very expensive exercise, right, to go and build a brand and essentially try and disintermediate and create what is really, like, at the end of the day, there are lots of credit card issuers already out there today. So and now you have another 3 or 4 or 5, and you're kind of like, okay, but what are they really competing on? And that's really why I looked at it and said, okay, so these new and emerging players have some new capabilities. What's stopping essentially these traditional players getting access to those capabilities? And I think what stops them is not the will, right? What stops them more than anything else is a funding cycle, which is really tough for them to live with in today's world. And so what do I mean by that? Well, typically every August, right, the big issuers sit around and start debating what it is they're going to build for the next year, right? So they have 6 months to sort of like look at the different initiatives they could have. And then they essentially prioritize those initiatives, and then January 1 hits and off they go, right? They start spending essentially down against the budgets that they had approved. Now, contrast that with fintechs. I raised a capital round, right? And actually, the amount of money we raised, 40 million, is way more than the discretionary funds I had when I was running essentially the B2B products inside of the largest credit card issuer. And I changed the direction, not 180 degrees, not 90 degrees, but every 2 weeks, I'm essentially channeling the feedback from customers to essentially redirect the initiatives we undertake, stop some, start others, accelerate some. And that's really what allows us to be nimble, flexible, and fast. Because again, we're smaller, we don't have silos, right? And so we make decisions quicker. What really stops...
Oh yeah, I mean, as a start, you're just going to have a size advantage on being nimble. You know, I think that's just, it's got to be. If you were telling me, hey, Mike, we're slower than American Express,
that'd be a problem.
You'd be in rough shape. Yeah, rough shape.
But I think my point was a little bit different. I think this, the problem they have is they have a massive existing base. They have a massive brand and reputation. And so, look, decisions by definition have to take longer. It doesn't matter. If we were in pharma, it'd be the same thing, right? If you're a biotech, you move faster, right? You have less of a brand reputational risk, et cetera, et cetera. And so I think there's just the natural, it's actually a really healthy ecosystem, right? To have essentially be a fintech serving capabilities, I feel, into the larger banks, because you can go out there and iterate and learn and do things really quickly, and therefore ultimately get the right tools in front of the banks and allow them to deploy them at real scale very quickly on the back of having found what are the capabilities that are needed.
When you say the word bank, you don't mean American Express and Visa. You mean the actual individual banks, right? For instance, you're if someone is using on the card issuing side, if somebody's using Amex, and I'm trying to understand the dynamic of the new card companies like Brex and some of the other ones. Would you say anybody is competing new in the space with Amex or Visa? I mean, is there anyone out there that's trying to build a new network entirely? Like, I guess Discover Card is kind of, I don't know if it's new, but it's smaller than the others. Is that an opportunity at all that you see, or is that game, it's already been determined, like Visa, Amex, MasterCard, they just have the relationships with the merchants, and that's it. Everyone else has to work through them.
Look, I think on the credit side, that's really what's happened. I think on the debit side, there's obviously lots of other networks as well. But again, on the global level, right, the three you mentioned are the ones that are driving the lion's share of the business. Now, obviously, people are trying to set up other exchanges too. That's the whole point behind crypto is, can you create another exchange? But the problem is it regulated, not regulated? Is it really seen as a commodity, right, versus a currency? And so that we're talking apples and oranges at this current point, because it's not regulated and it is a commodity and it fluctuates too fast for me to want it to be my household income, right, represented there. Because one minute I'm rich, next minute I'm poor, and I don't really know where I am. And that's different from really the bank rails and those things. So again, I think that you have to break it down.
Do you mean just because of the currency use? Like, couldn't you use a stable coin in theory that's just tied to the US dollar, or and accomplish the same thing?
I think you could, but again, it's all gonna be about trust, right? Do you trust it? Do you you know that's going to be the principal piece, right? Is it tried and true? And again, you're going to have to be able to explain this to the average consumer. And I think the average consumer sees it, mostly for speculation reasons today, and not really as a currency that they would essentially put their life, their life behind. And I think that's what you're going to have to convince people is, why should I trust, right? Essentially that stable coin over what I already know is essentially tried and true, and essentially I can rely on it, right? Because you're talking about people's wages, you're talking about people's ability to make payments at any point in time, and then you think about the broader bank relationship. It's also a lending relationship, right? Through which essentially you might get a mortgage or essentially buy a car. So it's deep, right? People like to try and carve off individual pieces, but you have to think of the holistic relationship that exists, right, with those banks. It is more than just a credit card. It is more than just a loan, right? There's so many components that fit into there that I actually think, at the end of the day, as I mentioned, I think before, it's people trust and inherently trust their bank. There's a reason why in the US there's still 6,000 financial institutions. It's because middle market and middle America still trusts, right, their local bank versus going to yet another different bank. So it's hard to dislodge, right, when you think of it that way. I think things have happened in other countries in Europe, right? They've consolidated the banks, has happened sooner, faster, partly, because of the environment over there. But the reality is, I think in the US, you have to go back to the fact that there are thousands of financial institutions and it's all based on trust. And that's a hard thing to dislodge.
Do you think that it's a generational thing? I mean, I wonder if the reliance on the U.S. dollar and the existing banking system is something that's harder. I'm thinking about my dad, for instance. He's very unlikely, no matter what I do or show him. I could break out the whole, Bitcoin white paper, show him everything I can. But ultimately, I feel like trust is established by people, by individual people that you highly respect, saying that they have done their diligence and trust it. For me, like I very much trust crypto, Bitcoin in particular, and Ethereum and Tether, because I've talked to people who have either worked directly on those projects and explain how they work, and they're like some of the smartest people I've ever met. And then the more I dive into the Federal Reserve printing of cash, it feels like, well, if the U.S. was in a perfectly stable financial situation, there'd be less of an incentive on the crypto side. But I think the inflation rates and just the amount of money that's been printed by the Federal Reserve seem to just just give people a big incentive. Maybe even not domestically in the U.S., but people in other countries that use the U.S. dollar as a stable currency. Like when their money starts to become, inflated, it's a hard pill to swallow. So, yeah, I don't know exactly where that goes, but it does seem like there's a big pressure that the United States is putting on itself to effectively become the second option. And, we're early stages in the crypto space. I just think it's kind of a matter of time, to be honest. So, so we were talking really about what I think is so interesting, that the intersection of the card networks and crypto. I mean, they're two massive, call them spaces or industries. But the card networks, to what you were saying earlier, to your earlier point, was they have built an enormously valuable network of trust of merchants all over the world. People can walk in with plastic and buy things. And that is amazing. You don't need any physical money. It's all represented electronically, which is a huge accomplishment. But like everything in technology, it will be eventually eclipsed by the next thing. And so I'm always curious about how the card networks are going to adapt. Are they like Blockbuster, where they're just not around in 10, 15 years, or they're some relic of the past? Or do we see like a spin out of like the Visa coin, and Visa doubles down on blockchain and tries to utilize their brand and transition it to the future of technology? And I threw all that at you, and I was curious what your reaction was.
Look, so I think first and foremost, right, people thought money was going to die decades ago, right? The physical currency. And here we are in a world where physical currency is still very much part of the present, right? Things take longer to change than people give it credit for. So I think that to think that those networks will transition that quickly, I think is not a real proposition. Number two is very clearly they're acutely aware of some of the changes that are happening to essentially the speed of money movement, right? Because ultimately it's to do with money movement and the cost of moving money. But that all has to then overlay with, again, this concept of trust. And again, I think they're working, they're collaborating, they're trying to understand, right, how they themselves would scale some of this technology within their own ecosystem where they have created a trust. And so I very much believe that they will be part of the transformation. It will not be happening around them. I think they will be very much in the discussions, and they will bring to bear some really important assets, right, to enable actually the deployment of those capabilities. Because again, you go back to that network piece, right? It's running currently on different rails, but it could very easily flip to a different rail on the other side, right? The question is, how quickly do you connect, right, a merchant with a cardholder? And again, how do you essentially create that piece is really hard to replicate. And they have it, and I think that they're going to be very smart about how they continue to use that asset.
Yeah. Does it matter for your business? I mean, if they, or if you wanted to add in like a crypto, does it make sense to have a crypto option layered on top? So if some merchants wanted to customize their payment method, or do you feel like the business is entirely laid upon the tracks of the credit card company?
Look, you have to remember that the use cases we're trying to serve, right? And in our case, it's about companies, right, providing controlled but simple access, right, to a form of payment that is either used by a merchant, right, to go and settle a bill, or it is used by an employee, a contractor, to go and purchase something on your behalf. And that can be related to goods, services, or travel, right? You're traveling on behalf of the company. So I think, if there are use cases that essentially can support, right, those very same principles when we start talking about crypto and other things, look, we'll be there, right? We're already talking at the moment about not just giving you access to credit. We're already talking to a couple of the networks of using their assets to say, actually, in some cases, I actually need to reimburse you. I'm not giving you a card to spend on my behalf. You spent something. I need a way to get the money back into your bank account. And can I do it just by knowing your debit card number? And the answer is, yes, I can. So we're already moving into a world where I'm going to be able to move actually money to your account just by knowing your debit card number, and it will therefore end up in your bank account. So lots of different things are out there. I think, we'll continue to look at other currencies, and we know that FX is a really important one, and I think that's where crypto, I think, is going to have a really big role to play in efficiencies of scale there in cross-border payments. And there, I think trust as much as anything is to do with time, and so obviously that work plays very much into the hands, right, of the crypto world. And so that's where I'm actually quite excited to see developments that happen in that FX space, because I think that might be the first area where we see some true need for those capabilities.
So we are talking about what I find is like, I don't know what to make of it. I mean, I think the banking industry there's some, how would you say it? There's got to be a natural evolution in the banking world. And people are going to think of, my opinion here is that the banking industry will be a subset of the bigger trend of moving money within the context of blockchain. So there'll be banking services, and you can get banking services from a local provider, using the traditional rails and technology that's been built. But then there'll also be options for decentralized companies and organizations, as well as just new banking-focused feature companies that utilize new technologies. And my question to you, and I'm so curious to hear your your response here is, do banks adapt, or do we look at the thousands of banks that are in the U.S. and there's this like massive collapse in the number of banks, the consolidation of banks begins in the 2020s, and 2030 is like, there's 20% as many banks. I'm curious what you think of the banking
Well,
sector.
I think, to a large extent, right, with initiatives like PSD2 in Europe, right, the open banking is obviously making it easier for folks, right, to go and create products and capabilities that are essentially focused on the financial services and banking. The question is, how much of these new banks are set up as a fad, right? Am I serving truly a very niche little segment of customers, and can it truly scale? I think those will ultimately fail. But what it's teaching us is actually different people need different experiences. There's just a point at which it doesn't make sense to create that experience because it doesn't scale. But I do think the banks will consolidate. I think it makes sense because much of it is a commodity. And so then it's really a case of, okay, if it's a commodity, then can I essentially get benefits of scale? And that's why we'll see the consolidation. And I think that's why there's a lot of care and attention being made by these banks as to who they would potentially acquire, because they want to make sure they serve the right client base with the same principles. So that's always something that these folks bear in mind. But again, I do think that also consumer will move at a different pace to commercial, because as a consumer, as a household of one initially, and eventually you have a family, so a household of many, you make decisions really quickly, right? As a business, it's going to be a little bit different, right? The risk appetite of businesses is very different to the risk appetite of an individual. So I think they're going to start operating at different speeds. And to your point earlier on, I think you're very comfortable with this ecosystem, but I think you'll find most people are very uncomfortable with it because they don't know it, they haven't experienced it, and therefore they don't know how to trust it, let alone if to trust it, when they don't understand it. And so I think all these things will play out over time, but I think consumer will move faster. I think commercial will be slower. And I do think the fad of breaking down financial services into like these minute little industry strips will also start to go away because it just will not scale. And I think it's easy for all of these things to grow in an economy where there's just plenty of cash lying around. I think when the economy turns and things start tightening up a little bit, people will start to really focus a little bit more on the big picture again, and really what is actually going to make money and what is going to make an impact, right, on people's lives and on businesses' ability to operate more efficiently.
When you started the company in 2016, you'd spent nearly 20 years working in, or 20 or more, working in, I'd call it the larger incumbent space, particularly with Amex. What do you feel is the experience like in starting a startup? Most people typically would start their first company, or 20s or 30s, like early on. Do you have any advice for I know you have a couple kids. Do you have any advice for starting companies later in life, or was it difficult for you? I mean, talking to you now, it seems like it was just a no-brainer, and you just, meet a buddy of yours and off you go. But I know from running companies, that's not actually how it goes. There's a lot of challenges in between. Were there any things that you used or people you learned from, or did you just naturally think of yourself as an entrepreneur the whole time you were working within larger companies and this was easy for you?
Look, I think the reality is I grew up with a father who's an entrepreneur in a very different context, right? My father did shop fitting equipment. We're talking about shelving, rotary shelving for supermarkets and grocery stores, right? It's a completely different field. So I saw what he did and what it took, and I swore I'd never do it. But here I am 25 years later, and I'm literally a cliche. But the reality is, no, it's not. Look, it's not an easy decision. The reason why, most people have this concept of it's like Bill Gates, you're in a garage and you start doing things and off you go, is because, look, at that age, there's very little risk, right? It's you're taking the risk on yourself. You have no other dependencies. And so realistically, right, it's a proposal that kind of makes sense. I think as you grow older and you start building a family, there's just so many other things that come into play, right? You start thinking about, over time, as boring as it is, you start thinking about your retirement, right? You start thinking about your kids' education. You start thinking about a million other things. And your risk appetite changes, right? Because frankly, right, your mind is in a different place. You've got different experiences. And look, I take everything I learned from my early days as a consultant with around SAP to the great and amazing leadership skills I learned at American Express. And those things pay me back in spades every day. They allow me, I think, as someone who unfortunately crossed over into the 50 handle right last year, to actually cut corners, because I know things from a leadership perspective that will have an impact versus won't have an impact. And it makes me think of things I need to consider that I might not have considered, which are important as you grow a company, because culture is at the heart of growing a company. And so it's really made me understand the importance of being true to yourself, and also just focusing on the right things, the big things, which maybe I wouldn't have done right at the ripe old age of 22, 23, right, when I was just racing ahead and not really thinking about consequences of my actions, of those of others, and therefore the importance of some of these things that I've learned over the course of the last 25 years.
Is there an example that comes to mind when you think of the kinds of things that you learned in terms of managerial work at
Look,
SAP?
I think for me, the whole concept of funding and fundraising and how you use funds, right? For me, that's a great area where I think we've benefited. Look, we built an infrastructure business, right? We sell our platform to banks. That is a long sales cycle at the best of times. And so it wasn't a case of raise money and burn it as fast as possible, because you have to reach milestones. And that's one thing you learn in a big company is what are the milestones you need to achieve. When you make a promise, you deliver on it. And that's served us incredibly well as we've thought about how we spend our money. Now, having now raised our Series B, we're in a different place, because now it truly is about scale, right? We have product market fit. We have great adoption across our banking partners. And so now it's about replicate and really get this engine running. But what has been helpful to us is we haven't burned through our seed and our Series A in 18 months, right? We effectively had 3 years worth of runway, right? Which is unusual, right, for a startup business. And again, it's countercultural to what VCs typically want you to do. But in this case, right, we had a clear vision and a clear understanding of what it would take, and we didn't trigger hiring until we met very critical milestones. And that's what allows us to build really the foundation. And from now on, right, the foundation's there, and now we can start to build a structure quickly.
This sounds to me like capital management. I'm curious about you on the people management side. Are there things that let me ask you this: how do you think people would describe Andrew Jamison that have worked for Andrew Jamison or currently work for him?
Look, I've always made a point of talking about trust. People work for people; they don't work for companies. They might work for a company or a project for a year and a half, right? And after that, it all gets a little bit old. And so for me, it's always been about trust. It's about being vulnerable, right? And I think it's about being constructive, right, in feedback. I think all of those things are really key so that you allow people the opportunity to learn and to continue to learn. For me, those are the things that people really rally towards and gravitate towards. And you build that ecosystem and people will run through walls for you, right? It suddenly becomes a family, right? More than a job. And I think if you can create that culture where people know you have their back, where people know that if you make a mistake, it's fine, right? We're going to essentially learn from it, and we're going to keep driving, and we're going to keep learning. And I think that's how I certainly hope people would describe me. It's certainly what I've espoused as critical to the teams I've built and led. And interesting enough, right, the way I've always known if I've built a good team or a bad team is if I think of an activity that we're all going to do, I sit there scratching my head going, that's going to be a tough one, right? And the reason why it should be a tough one is you need to recruit, right, people who are different to you and to your skill set. And so in order to do that, it should be somewhat uncomfortable, because the whole point is they do things that you don't do well, really well, and vice versa. So you become really complementary to each other. And so that's always the litmus test, let's say, for me is okay, it's time to organize an offsite. And I think you asked me earlier on how many folks are in a company. we grew pre-COVID from 17 and we're now 45 and we're hiring, right, another 30 people over the course of the next few months. So scaling fast. But I think that's really the key is being able to instill that culture and then give people the confidence that if they recommend people, right, that they're going to also have a shot at bringing those people in the organization. In today's world, so hard to hire, right? And so the best way for you to hire is essentially having people making those recommendations across people they've worked with before who they highly, highly value. And you start spinning out the network. And actually you end up with better hires too because they're tried and true, right? They've worked together before. They know the value. They know they would fit in. No one wants to recommend, frankly, someone who's not going to be a superstar. And as a result, right, you create a really good culture and a great dynamic.
Yeah, I love it. I love it. Any consistent logistical tactics you take with management? Do you do daily meetings or monthly meetings or OKRs, or is there any specific practical framework that you like to employ?
Look, I'm a firm believer, right, of having meetings with a purpose, right, with an agenda, and essentially, right, an output that you're trying to get from those meetings. So sometimes I think having standing meetings is almost like stops you from being nimble fast, and it's almost going back to my old days, right, of like, oh, big company, got to have these meetings. Now I do insist on a essentially every Monday, right, we have a stand up that lasts about 45 minutes. And I think that, again, it's all about level setting people on what has worked well, right? We always review the numbers. Numbers don't lie, is what I've learned over time. So you better trust them because they paint a certain picture. And then it's all about saying, okay, what are the bottlenecks? How can a team in servicing be helped by the product team? How can a sales team be helped by a different part of the organization to sort of keep momentum going? That's really key. And then look, as three founders, we try and meet every day for 30 minutes. But it's 30 minutes. It's not an hour and a half, right? It's really short, sharp, and just again reminding ourselves of the tasks at hand. And I will say that, unlike my father, who went out and actually he created the company with one of his brothers, but I'm in so much admiration of founders who go out and do things on their own. I have no idea how people do it because I think it's hard enough with three of us and with three folks, again, in their 40s. And I'm like, it's a head turner, scratcher, and all of the above, right, to keep the wheels on the bus and moving at the pace you need to move. I really am in massive admiration for folks that have done this on their own because frankly, I don't know how they do it and remain sane.
Yeah, agreed. And are you guys in person or are you all
So look,
remote
we've
now?
been remote since COVID came about back in March of 2020. And we have tried to meet, right, in a socially responsible way. I think over the course of summer, we did outdoor meetings as founders, right? We would grab drinks with team members who were in the city, right, outdoors. So we've tried really hard to sort of create a fabric where there's a social element to it, right? Because, one of the great learnings I had from business school was you don't bond together over a spreadsheet. You actually bond through experiences, right? And typically those things happen outside of the spreadsheet, not in a spreadsheet. So again, try and create those environments. So we were remote. We had weekly trivia games and things that we sort of instigated to make sure that we had an opportunity to have a happy hour where we could sort of do different things. And now we have essentially taken up a WeWork space that we use, right, as a team here in New York City, as and when people need it, right? And when we get breakout rooms. But we are now pivoting back to actually getting an office, right? We're currently looking, and we're very far down the line, and hopefully we have something before the end of the year. Because I think like COVID is a reality. We're going to live with it for a long, long time, and hopefully it ends up becoming what we hope it is, which is it's going to be a flu-like symptom, and ultimately we're going to have to manage it on an annual basis. And so it's less about infection rates, and it's more about, frankly, the percentage of people that end up in hospital and the percentage of people that unfortunately succumb to the illness. And I think that's being managed statistically. At least I'm seeing it from the vaccination, right? It's actually working. Those who are vaccinated aren't going to hospital anywhere near as often, and certainly are not dying as well. So for me, it's about that's a new reality. That's what we're going to live in. And I think many people are getting to that point where they're like, you know what, we need to move on and we need to live with this. And people feel that they want that human connection. But we do have a pretty dispersed team. I'd say 25 are here in Manhattan and another 20 are dispersed across the country. And actually, we've all learned it actually works pretty well, right? The key is, can you pull together a team at critical moments when, again, you have decisions to make and you want to do a brainstorming exercise, which is just frankly just better done in person. And we were fortunate, right? Just last month, we had our first offsite. We brought everyone together to a venue in Atlanta and had a phenomenal 3 days, right? It was, again, more than half the company was new, half the company hadn't met. And again, we created more of a social agenda than truly a work agenda, because again, it goes back to, right, you bond over experiences and certainly not over committing to work projects.
Yeah. Well, good to hear you guys are getting back to life, as I do think there's an externality price that we all pay by distracting ourselves. And it certainly seems like it's about that point. Andrew, thanks so much, man, for coming on. Congrats on all the progress. It sounds like an awesome company. Thanks for entertaining my ideas on crypto and diving deep into speculatives. I like to make guests a little bit uncomfortable and push conversations. So I had a lot of fun. And wish you all the best.
Mike. Thank you for having me on the show. Really enjoyed the discussion. And look, if I didn't like having the conversation pushed in different directions, I'm also in the wrong job. So thank you for that.
All right, man. Well.